Hello and welcome to this Tuesday's morning market briefing. We've got lots to talk about, but firstly, China and Russia challenge US claim to mineral rich stretches of the seabed, as well as that the Boeing CEO Dave Calhoun is to step down as company battles safety concerns. We've got lots to talk about on the charts also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it though, make sure you subscribe. The first article to talk about is of course China and Russia. Now, China and Russia are now challenging the US claims to a swath of mineral-rich seabed. This comes following the US failing to ratify a treaty that governs their access to resources in international waters. Now, of course, this is a very important article to talk about, not least just talking about the oil market, the natural resource market, but also I think it's important to kind of note in regards to US and Chinese and Russian relations. Obviously, we know that currently during the Biden administration, Chinese and US, as well as Russia and US relations are at their all-time low for at least going back 20 years or so. And this is obviously following, of course, for China, the Chinese spy balloon incident over the US, which was shot down by the US military. And then with Russia, of course, the Russian invasion into Ukraine, where the US has now responded up to this point, supplying Ukraine with both humanitarian and lethal aid. So, Russian and Chinese relations with the US is, of course, at their all-time low. And what we're seeing here, and what we'll get into in this article, is basically, another attempt by China and Russia to disrupt the US in any way possible, and in this case in the more economic sense of disrupting their ability to mine for these natural resources, which of course most nations rely on, all nations rely on, and certain nations such as the US make a great deal of output from having these mineral rich stretches of their seabed. Now, of course, this is also very important to talk about in regards to the oil market. Of course, the oil market's kind of been in a very interesting position recently after the price of oil has risen following new predictions for supply and demand of oil made by the IEA, where the IEA basically predicted that there will be less supply than was previously expected, and there will be greater demand than was previously expected. And this obviously came in line with Saudi Arabia and Russia making sure to lead OPEC Plus towards another year of oil supply cuts, which adds to the price strains and pushing price higher. And Biden is having a very hard time at the moment as a result of this oil market. And I think that's something that's always important to note. We know, of course, that Biden is heading towards these 2024 presidential elections against Donald Trump, it does seem like. And as a result, the inflation issue is very important to note. And we know that Biden has dealt with a serious inflation issue during his presidency, and that is weighing on the minds of most voters, with many voters, I think most voters, believing they were better off before Biden came into power, and the oil prices, the petrol prices, the gas prices are a big part of how consumers, how voters views on the economy are shaped. So understanding more about the oil market in particular to the US is very, very important. And we know as well as that there's been a great deal of domestic pressure against Biden, or for Biden to basically deal with the Chinese mineral extraction market, and basically respond adequately by expanding the US's mineral exploitation methods. So that's kind of been a key point of contention around the Biden administration, and is certainly something that's important to highlight in regards to this topic, as what this article does go on to note is, of course, that the Biden administration, if they're not able to deal with this issue, which is growing in regards to China and Russia challenging the US's claim to their mineral rich stretches of seabed, if, the Biden administration is not able to do that, they certainly do risk not only losing a race to China and Russia doing the same, and expanding their kind of influence into those areas of seabed, but also of course losing the presidential race this year. So the Biden administration in this battle with China and Russia is seemingly fighting two wars, one against China and Russia and one against the kind of Trump campaign in the lead up to the November election. So a very interesting article to note here. Now, the Chinese and Russian diplomats have said that the US's claim to an extended area of seabed was unacceptable given their position on the 1982 UN Convention on the Law of the Sea, called UNCLOS, if I pronounce that right, UNCLOS. Now, in response, hundreds of former US government officials and military officers have written to Senate leaders urging them to ratify UNCLOS, which, would help ensure that the US can harvest critical minerals from the sea floor. The area of sea floor which the US is looking to extend is twice the size of California. So, most certainly, this expansion will add a great deal of, area to the US and expand the US's ability to mine for these mineral-rich areas and exploit the materials within these areas, of course. Now, an area of sea floor, being considered here includes regions in both the Pacific and Atlantic Oceans and the Gulf of Mexico. Many have noted that the Russian and Chinese opposition to the extension of the US seabed area is as a result of Russia and China looking to disrupt the US in any way possible. Now, this situation piles extra pressure onto the Biden administration, which is already facing a great deal of domestic pressure to compete with China on deep sea mining, and that's what I noted earlier as a key issue which they're having to deal with and are receiving a great deal of pressure over. Now, further than that, the situation stokes concerns that China may continue to try similar disruptive techniques by gaining top positions in international bodies, such as what we've seen with UNCLOS. So, a very important issue here to know, and something that's definitely going to be affecting the oil markets, but also affecting how the Biden administration proceeds in the coming months in regards to both economic policy and deep sea mining, of course. That's all to talk about in this article, though. Next article to talk about is to do with Boeing. Now, the CEO of Dave Calhoun. I'm probably pronouncing his name wrong, pardon me for that. Now, the Boeing CEO is now to step down at the end of the year following safety issues. This comes as Boeing struggles to contain a crisis following a mid-flight blowout of a door panel which went on to expose issues in their safety standards. Now, this, of course, is a very important article to note, largely because we've noted, this issue with Boeing many times now before. We've kind of been staying up to date on this issue as things have developed. Of course, we covered it straight after that mid-flight blowout with the Alaska Airlines Boeing 737 MAX 9, where we did see the door blowout, which wasn't being used on that flight, and seats were next to that door. Luckily, of course, nobody was injured or indeed killed by the issue, and that was, of course, kind of a very great fortune to Boeing and also the passengers on board, and the flight landed safely just minutes after the incident. So kind of Boeing got away somewhat scot-free from that incident. We could definitely be seeing a much larger fallout did anyone get hurt by that kind of issue. That said, we've still seen a massive fallout from, that blowout with, of course, the immediate follow-up to the incident. We saw all those Boeing 737 MAX 9s being grounded within the US. We know that the US mainly operated that kind of carrier We didn't see many other nations using that kind of plane, plane model. I think some in Turkey, but most of them in the US, and so we saw most of those grounded. That, of course, has its effects on airports and airlines that are trying to arrange flights to different areas, and created a great deal of delays as a result. So that was certainly a kind of other aspect of the fallout which has taken place. And as well as that, we've seen Boeing's stock, of course, sell off greatly, and that's what we often focus on in this channel, of course, focusing on the markets. We were mainly focusing on the issue in regards to Boeing stock, which did sell off greatly following the incident, which we will come to on the charts just after this article. But ultimately, what's seemingly going to happen here is the Boeing CEO will step down. We'll see the Boeing CEO replaced in an effort to re-image Boeing and progress the company forward into a new time, a new era, a scandalous era. An era free of any scandals. And ultimately, progress the company to bigger and better things. But that said, of course, Boeing is still facing a great deal of kind of investigations, not only by the Department of Justice, but also the US Federal Aviation Administration. And all these investigations are, of course, highlighting a great deal of safety issues and safety concerns, which are likely going to continue weighing on the Boeing stock. So I think that's something that's also important to note. Now, Boeing also announced that its chair, Larry Kellner, would also be leaving the board in May. The head of the company's commercial aeroplane division, Stan Deal, is also to retire immediately after, of course, being at the center of the door plug incident. The door plug incident was when, of course, the door panel blew out mid-air during an Alaska Airlines flight back in January. This accident, which involved a Boeing 737 MAX 9, is now being investigated by the US Department of Justice and US Federal Aviation Administration, with this now forcing the company to slow its production of the 737 MAX whilst it solves manufacturing flaws, with some airlines having to amend their flight schedules. Since the door blowout incident, the company's value has decreased 23% to $191.4 a share. Apparently, the Boeing CEO Dave Calhoun's decision to retire was 100% his choice. Boeing, however, is now faced with a great deal of complaints from their customers. One of those being, of course, the Ryanair CEO, which had put in a great order for this specific model, I believe, and is now kind of calling for some kind of compensation for the issues which are now occurring and the delays to those orders which are taking place. So, a very interesting article here and a very important one to note in regards to Boeing. That's all to talk about in the articles, though. Next to talk about, of course, is the charts, where starting off the week, we've seen a great deal of movement. To begin with, of course, we are talking about US equities, more specifically, of course, the US 30, the Dow Jones, where price has continued to sell off starting the week. Now, last week, we did see price climb to new all-time highs. That said, on Thursday and Friday, ending off the week, we did see price begin to sell off, and we were kind of expecting this retracement, as after all, on the RSI, we can immediately note that price is in that kind of overbought territory, so kind of overvalued territory, and so we were expecting this. That said, this is a very significant sell-off, and as fast as we've come up is as fast as we've come down. And now price is, coming near this key area which we did note in yesterday's weekly market briefing as a key area where price may then find that bullish liquidity and then begin a move back to the upside and continue this long-term US equities rally that we've seen both across on the US 500, the US 100, and of course the Dow Jones, the US 300. So price is currently around that 50% Fibonacci retracement level that we just did note, and is also just sitting above this key liquidity zone, which of course will be very interesting to see, which of course makes it a very interesting level to watch should price come down and tap that zone and then continue higher. That's all to talk about in the US 30. Definitely keep your eyes on this key liquidity zone, though. Very interesting indeed. Next to talk about, though, is of course the dollar. which is now sold off from this key liquidity zone. This was kind of the next area that we spoke about, which price could make its way up to and react with, and price has now seemingly done that. Price has made its way up and is certainly now reacting to that area, and we're seeing that kind of bearish reaction. That said, we're not seeing an overwhelming amount of bearish momentum to the downside now, but we could definitely see enough a great enough move to the downside for price to maybe make its way down to this 50% or something, and react with this liquidity zone as well before continuing this move to the upside. All of this, of course, is predicated on any news in regards to the Fed, or any economic data which is also coming out. So I think that's the important thing to also look out for this week. Today we're not getting too much data, so we could just see price may continue the previous trends that were set yesterday. Next to talk about though is Euro USD, so still on top of the dollar, where price has reacted with this bottom of the market, this key liquidity zone, which we did note in yesterday's market briefing as a key area which price may react with to definitely start off the week. And that is definitely what we've now seen play out on Euro USD, with price now making its way on the way to the upside, which is very interesting to see. The question is, of course, how far will price make its way to the upside? Or will price just kind of stop off at one of these key Fibonacci retracement levels before continuing a sell-off to the downside, like around this 3820, which of course lines up with this key Fibonacci the 3820, which of course lines up with this key liquidity zone as well. So definitely keep your eyes on Euro USD. Next to talk about though is pound yen, which is now, of course, reacted to this 50% Fibonacci retracement level, which we noted in last week's briefings as a key area where we were expecting price to retrace down to. And in yesterday's market briefing, we did note that price was at that level to start off the week. So we were expecting some level of a bullish reaction from that zone, and we've certainly now seen that play out. The question is, of course, how far will price now make its way to the upside? We haven't seen an overwhelming amount of bullish momentum enter the market to start off the week. So possibly we're not going to just continue higher and break above these previous highs. So definitely keep that on your mind as well. Next talk about though is Bitcoin, which is in a very interesting position after gaining momentum over the weekend and now starting off the week very, very strong, pushing from $66,000 a Bitcoin all the way up to $70,000 a Bitcoin. So pushing above this key area of liquidity, which we know has acted as an area of bullish liquidity before. So very, very interesting to see on the charts. The question is, of course, whether price will now hook back and connect with this liquidity zone, or will in fact just continue to the upside and break these all-time highs once again. Next talk about though is gold. Not too much to say on gold. It's kind of moving in a very slow fashion at the moment, consolidating. That said, any news in regards to geopolitics, or of course politics as in general, or finally, of course, economic data from the Fed and that kind of thing, that's the key thing to look out for to see where gold may move in the future. So keep your eyes on all of that. Not too much to say on gold though. Lastly, to talk about on the charts, of course, is oil, which is now kind of making its way to the upside once again after reacting with this liquidity zone. That said, we're seeing price wick to the upside, so possibly there isn't too much strength within the market to the upside at the moment, so definitely keep that on your mind as well. That's all to talk about in the charts though. Lastly to talk about, of course, is the economic calendar. We're getting a great deal of data this week. It's not loaded all of it, but we can still talk about it nonetheless. Firstly, we're getting pardon me, I didn't mean to say data this week, just data today. Now, firstly, we are getting German consumer confidence figure, followed by the Spanish GDP growth rate figure. Followed by that, we're getting the US durable good orders figure, and then the US house price index figure. Lastly, we're getting the US consumer confidence figure. So not too much data that we're getting today. Some important data nonetheless. Definitely look out for it all. And yeah, that we've covered lots on the articles, lots on the charts, and lots on the economic calendar. That's all from us at Wildwood Capital though. I hope you have a great trading day. Have a great one. See you later. Bye.